Welcome to Think Tech's virtual meetups for the summer season, an initiative organized by the Saudi Ministry of Communications and Information Technology. Think Tech aims to create a stimulating digital environment and to spread digital awareness about emerging technologies. In this optic, we are happy to introduce you to a series of meetups focused on emerging technologies. Today, we have the session, How Venture Capital is Driving the Future. My name is Sami Abusab, and I will be your moderator for this session. So today I'm going to start a little bit by introducing our panelists. We have an impressive roast of panelists today, and would love to start by sharing a bit about each one of them before I give them the floor. So first we have Abdulaziz Al-Amran. He's the CEO of Impact 46. Impact 46 is a fund that invests in early stage and growth as well. Prior to managing Impact 46, Abdulaziz has developed extensive experience in finance and entrepreneurship. In fact, Abdulaziz holds several hats. He is currently the VP of Khalid and Abdulaziz Al-Amran. He established Z Digital, one of the most successful digital printing businesses in Riyadh, and he held several senior positions in prominent financial firms. Abdulaziz also holds an executive MBA from London Business School. Next, we have Mohammed Azabi. He is a managing partner at Nama Ventures. He leads the fund by relying on his international and broad expertise in investment and entrepreneurship. In fact, Mohammed has founded several startups and invested in as many as 25 investments so far. He also supports entrepreneurs across geographies. He is a member of both Saudi Hill Angels and Okal. He is also a founding board member of TechWadi in Silicon Valley. Mohammed also holds an MBA from London Business School. We have also Ahmad Naimi. He's a partner at STV. Prior to joining STV, Ahmad founded his own startup, Vocus.io, based in Seattle, and he is still working on it till the present time. Ahmad relies on his great experience in both enterprise product and business incubator management in order to deliver customer-centric solutions. He also uses this expertise to guide several startups to which he is an assigned board member. Some of these are Visita, Uniphonic Inc., and Trucker. Ahmad holds an MBA from MIT, Massachusetts Institute of Technology. Then we have also Walid Mansour. Walid Mansour is the managing partner and CIO at MEVP. Prior to onboarding the startup investment scene, Walid worked with multiple big consulting firms from Roland Berger, Booz Allen Hamilton, and others. He also worked as a strategy manager at the UAE Prime Minister Executive Office. Walid has guided MEVP through its 3 different funds, from a Lebanese grounded seed fund to an international growth fund that is now currently investing in Saudi as well. This has led him to be a board member of several startups that MEVP invested in, such as Nana, Anghami, Falafel Games, and many others. Walid also holds an MBA, but from Wharton University. So now I'm going to give you a bit the floor to a little bit discuss and introduce your own funds. So maybe I'll start with Abdulaziz, and if you can share a bit about Impact 46, the funds that you're managing, the geographies you cover, and any specific industries you look at.
Thank you, Sami, for your nice intro, and it's an honor for me to be amongst this prestigious group of people. It's a good observation. It just came to me that they're all MBA holders. I don't know if that's a good thing or a bad thing. Let's see. So Impact 46 is an asset management firm, and we also have an advisory license under the CMA regulations. We are known for our tech investments because all our 3 funds that we have are tech-focused funds: the early stage fund, the growth stage fund, and the Jahiz single asset fund. We're most known for our investment in Jahiz because I guess many people are probably pound users of Jahiz, and Nana as well is another well-known investment of ours. Then there's the other interesting startups that we're proudly part of. I don't want to name a few and then forget the rest, but it's 13 startups that we're involved in right now. Yes, and the size of the fund, the stage and size of fund and focus. So the ticket size ranges from 4 million riyal, from 2 million riyal up to 100 million riyal. It is a wide range, but it just gives us flexibility to evaluate every investment based on its own merits. We don't. We are unique in the sense that we're very flexible and focused on the opportunity, not the stage or the type of technology. In terms of sectors, we tend to favor fintech, which I guess is a focus of many people in our region, and seems to be an area that many believe has good potential to grow. On-demand business models generally is also another area of focus. We think we already made our biggest investments in on-demand services. Then certain marketplace plays where unorganized markets, we think technology can play a big role in organizing them. So these are the three areas we like to think of as our focus, but as a mandate, we're sector agnostic. What's very unique about our funds is that we are almost entirely focused on Saudi, which is, we're probably the only ones that chose to be entirely focused on Saudi. And maybe because our firm's name is actually Impact 46, comes from the longitude line of Riyadh, and we tend to keep it at Riyadh and just focus on Saudi. And that, I think that's been, so far it's been helping us keep our focus and just keep any unnecessary noise away. And we've been really, really lucky so far. Thankfully, it's been a year, but it feels like ages. A lot has happened.
No, that's great. Cool. I would like to jump also to Mohammed to share with us a bit also about Nama Ventures and similar to Impact 46, kind of the stages you're at, industries, geography coverage.
Perfect. Well, first of all, thanks for hosting us and for the people listening to hang out with us tonight. Yeah, and they have better things to do, so we appreciate the audience. And look, Nama is a pre-seed stage fund. We're sector agnostic, but we're very stage specific. We're MENA focused with the double click on Saudi Arabia. We're a bit differentiated that we're, tech entrepreneurs investing in tech entrepreneurs. So said differently, we're geeks, funding geeks. I'm on my 45th investment, so I need to update. But in the wave background, we're engineers turned engineering managers turned entrepreneurs, failed before we succeeded, went into the angel investment space, individually, then institutionally, failed before we succeeded, and then decided to make the night job the day job through venture capital. And that's how Nama Ventures was born.
Great. Maybe I'll turn a bit to Ahmad, if you can share with us a little bit also on STV.
Of course. Thank you for the opportunity. So STV is a venture capital fund. We started early 2018. Today we have $500 million under management. We invest in technology companies. We're subsector agnostic. Since we started, we're looking at a portfolio of 10 companies. Alhamdulillah, we have Kareem, which exited. We had a good exposure to Kareem. Other companies are the likes of Mersul, Noon, Na'na, with few here. We also have Visita from Egypt, Trucker from UAE, and a couple bets from the US. The team is we're all technologists to the bone. So, for example, my previous job before STV, I was in a company called Algorithmia that sells a marketplace for algorithms. So we're all lifetime coders. We understand technology inside out, and that's what gets us excited. And because of the size of the fund, we're really we prefer to be a late stage, although we do make exceptions in exceptional cases. We have come early, and we will make it when necessary. But what matters to us is that we back the companies tackling really large markets that can become unicorns in Saudi or in a few other markets as well, in addition to Saudi. And then we support them in, we have a very well put together institutional support, senior members whose sole role is to focus on, have deep dives with our portfolio companies, identify what are the areas that they need the support in the most, whether it's hiring or strategy setting or biz dev, and then create the right playbooks out of our portfolio and cross-pollinate best practices. We also have our LP, Saudi Telecom, where we have more or less access to some of their assets, which we make available to our portfolio companies. So in that way, we provide much more than capital and much more than even the know-how of our team, which is something that we always try to build on.
Great. No, this is amazing. I want to jump a bit and ask Walid also to go over a bit MEVP and tell us also on your way around the journey you went through from like Beirut to Dubai, now investing in Saudi, and what also got you to Saudi in that sense.
Sure. I will say good evening. I started in this industry about 15 years ago in Dubai. And about 10 years ago, when we launched MEVP, the idea was to invest in MENA companies, technology companies that were based across the MENA region. So we did our first investments in the UAE, Saudi, Jordan, Egypt, Lebanon, and then we expanded with time to new countries in the region: Kuwait, Bahrain, Turkey, and recently Pakistan. So yeah, we've been at this in the MENA region for some time now. From seed, Series A, Series B, we have a model where we, as VCs, we manage our own funds. We are also investors, personally investors in our funds, but also have put it together a platform where other investors and co-investors have been able to join with us. So we've been probably exposed to more than 100 LP or co-investor. We found this model to be interesting and scalable, and most importantly, helps you build the right network in every country. Networks are important in this business because you need to be able to help a business grow, especially a tech company. Alhamdulillah, I think we've invested in about 100 companies since we started across the region. We've done a few exits. Our first fund has shown very strong returns, fully exited, which means it's always nice to go through the cycle once at least, so you know how it works. Fund 2 and 3 are MENA Fund 2 and 3 are still unrealized. They're still invested. It's been an interesting, exciting journey. Obviously, the Arab world in the past 10, 15 years has gone day and night, specifically Saudi. And I remember very well the type of companies we looked at. Some of them have disappeared. Some of them did very well. And in particular, very recently, there's been an interesting uptake in companies and in talent in Saudi Arabia that we are very excited about. So as an example of recent transactions we've done, we've been invested, for instance, in Nana as an example of company that scaled very quickly from the seed, Series A, Series B. And we've been exposed to a few companies as well. We're in closing mode now with other companies from Saudi Arabia. And I'm excited about what's going on in the country. I think it's amazing to see all this talent, all these, this new energy. Hopefully it will be even more exciting in the coming 10 years.
No, indeed. I was actually looking at the Magnet report for the first half of this year, And just to share some numbers with our audience tonight. So in the first half of 2020, $95 million were invested in Saudi-based startups. That's technically more than the whole 2019 year. And that's only in the first half of the year. And like, if you look at the numbers, they're just growing almost exponentially. And on that, I want actually to pick your brain, Abdulaziz, a bit on one matter. So you've seen the scene also changing from Riyadh and over the last couple of years. So I want to get a bit your view on how this changed over these last couple of years, given this growth that's a little bit like very fast.
Yes, true. The number you just mentioned, actually, the 90 million for the first half, half of it is probably Jahiz transaction, and which we've been involved in, and then Nana is most of the rest. So we're proudly a big part of this jump, and we're happy to be part of this movement, and we think we're early in the cycle. There's no doubt that the government support programs led by JEDA and SBC help the ecosystem in Saudi a lot, and is spurring investment from private investors, maybe even faster, that are trying to race and rush maybe ahead of the government money, as you would expect from private sector investors. So the excitement I see from private investors trying to enter the tech space is really mind-boggling. I'd never expected to have such excitement among the private investors in Saudi. I mean, I can see it. They compete. I mean, angels are competing with us on deals. More, let's say, structured investors are. I mean, after us trying to invest in our fund, we hardly take a week to close a fund or something. We have more around $100 million now under management, and we just need to announce a fund, and thankfully people come in right away. We started our Impact 46 from the backing of SBC, because of SBC, I would say, and I'd like to thank Dr. Nabil here, because he was really a very, very helpful and a big reason why we started this firm. And he was the anchor investor in our first fund. And then after that, all the next two funds that are bigger, maybe double the size of the first fund, have no government money at all. We didn't need to ask for any government support. It was fully private sector funded, and I mean, we're just picking our investors. And alhamdulillah, thank God for thank God for the trust we have. The investors have entrusted us, and we just hope we can live up to these expectations. So what's happening in the tech investment scene is something I would have never imagined. I remember back in the days when we started Uqal for 2011 and 12. I remember the discussions certain investors used to have, and the frustration founders used to face when an investor would say, well, how much premium are you charging me to my shares? Now it's the other way around. Now the founder is saying, how much are you going to dilute me from my company's ownership? This whole discussion was not even close to the discussions that we used to have 7 or 8 years ago. How this changed over a short period of time, I'm just really happy it happened so fast, and I hope I really believe it's the beginning, and it's hopefully the beginning of something that will continue for years to come.
Yeah, no, look, what you're sharing is like spot on this, because also another report by STV actually highlights how the growth of this Saudi investment ecosystem grew. So you mentioned SVC. SVC invested in 10 different funds till date, from what I know at least. And also the report of STV highlights the growth trajectory from 2015 to 2018, showing 90% annual growth of the investment seen in the kingdom. And then from 2018 till 2025, a 40% annual growth, reaching a total of $500 million investments per year. So that's pretty significant if you look at the overall region and what's going on. And on that, actually, since this is a report by STV, I want to ask a bit Ahmad his opinion on the 500 million number. This is also the size of the STV fund of having in 2025 yearly investments of $500 million in startups in the kingdom. How do you foresee this kind of healthy trajectory and fast growth? What's the proxy for success, and what's the healthy way of doing things given that fast trajectory?
Sure. So this is based on data that STV developed in 2018. Alhamdulillah, if we look at the trend in 2019 as well as 2020, it seems that we are on par with what we forecasted 2 years ago. So inshallah, if everything goes well, we could pretty much end up with $500 million deployment in a single year. While it doesn't really look like a lot, but if you understand how this was calculated from the bottom up, you would see that this only would take us to be on par with other countries. So it is our fair share of deployment, and it's not. It's the right thing to do. What's important for us here is to make sure that all of this deployment and capital actually translates to value that sticks around, whether it's through job creation and economic multiplier, etc. So I think every signal that we have so far, it's a positive signal. It's a good proxy for health of the ecosystem. And I think us as investors, we also, it's not only reflected on the checks that we deploy, but the number of companies that are deserving of these investments. So everything looks green, inshallah, and we're looking forward to see this progress.
Yeah. No, look, I think this is pretty exciting moment right now in the kingdom. So I think it comes to mind also the journey that MEVP went through from investing a bit early stage, then moving to later stage. And I guess one question to you, Walid, on that one is that how do you foresee the ecosystem maturing moving forward from having early stage investors to maybe much later stage investors? Right now on this panel, clearly we have a little bit of every stage. From NAMA at the early stage, also Impact has an early stage and the growth stage, and much later stage at STV. Just want your perspective, since you've been active in the region for a long time, of how you see this ecosystem evolving across the stages and what's going to happen to reach that point in 2025.
Sure. You don't know what the future is made of, so we always assume the best. I think it's important in this business to have been an angel investor or an early stage investor to understand VC very well, and to have done it yourself personally, and to come from that space, because Aziz was talking about Alqal. I think Alqal was a fantastic platform in Saudi Arabia that has done a lot in terms of educating and putting together a lot of companies out there on the map. And hasn't been for Alqal, a lot of companies, including I think Kareem, would have not survived. So that's very important to keep in mind, because the job and the gap is still at that level. Aziz was mentioning that the majority of the money raised in 2020 went into 2 deals, and that skews the data, right? Because all you have to do is just write a big check and the data is skewed, so it doesn't really tell anything. What matters are companies that are being created every day and volumes, and The second step is, where are they selling? Are they just selling in the kingdom, or are they global, or are they regional? Because they will never be able to grow into something meaningful on the basis of only one country. All of our countries, all of our markets combined are interesting on a global scale, but individually, all markets are relatively small. So what's important next, and then more of a early stage angel Series A is much needed. Quality of companies have to be not local, hyper local, but has to be regional, at least, or global, for them to grow into the numbers that you're talking about. And 3, I'm not worried about the growth stage, to be honest. I think the growth stage will be very fairly covered quickly. Today, we don't see it emerging because it will take time to happen. But when you look at banks, financial institutions, there's a lot of products and offerings, whether it's private equity or debt, that could enter and fill that gap very quickly once you get the base right. And I've seen this happen in other countries. So I think I still believe the opportunity is at the very early stage. That's not going to go away, and I'm not too much worried about the later one, because it's technical. The more you grow into the private equity space or growth VC space, it becomes really technical, and it becomes a matter of what price you're buying at, and how are you able to generate value and exit. And the way they do it usually is through a mix of debt and equity. We still don't have debt markets. There are a lot of initiatives, people are working on that, but that's going to happen, and that has happened in every market. So I'm not worried on that front. I think we should really continue doubling down on the earlier side of the stories, but do it with a global mindset, not a local mindset. So source locally, but sell globally.
Yeah, no, I think, yeah, that's pretty good feedback, because I guess that's a little bit also what made the kind of big exits in the region be a way to foster the ecosystems and to look for more investments like this, since the returns were there in those big investments or big exits, let's say. So hopefully we see some more of those coming out of the kingdom's investment. But you mentioned also something around the earlier stage, and there I'm going to go a bit to Mohammed, since that's where their focus is today. And that's where usually, like, I personally run an accelerator, so clearly we've seen a lot of pre-seed and early stage, and many failures happen there. And I see that you personally also are very open to speak about those failures, whether from investments you've made or things you funded or stuff you've been through yourself, and you're open to talk about them freely. Something that's not always the case in let's say, the Arab world in general. So can you share more about this, and how do you perceive it from a personal level? And also, given that's the early stage focus and Walid's point on things being more global, how do you look at those at the early stage, whether with the failure in mind or also with the global mindset in mind?
So you want to open up some, wounds that we finally stitched with the failures. Look, you hear this a lot, that failure is celebrated, and but I want to challenge that. Failure is not celebrated. And for somebody that spent a good chunk in Silicon Valley and in the region, nobody goes and says, "Yay, I failed. This is an honor or privilege." Failure is respected. Failure is appreciated, but it's not celebrated. It gives you context. It gives you an understanding of what not to do next, and learn from the mistakes. So we tend to, if we see a failed entrepreneur, we think that's a plus because they've gone through the journey. They walk the walk, and hopefully they're not going to make the mistakes again. Failure is a fact in our business. I mean, if you Google VC, Google will tell you 8 of the 10 bets, will not make it. And we tend to not emphasize on that when we talk to our LPs, but it's the nature of, the business. And going back to Walid's point, you have to understand that, especially if you've done it through an angel when it's your money, and even as a VC, it's even tougher because it's institutional money. It's other people's money, and you're being judged as the whole ecosystem. You want to create a continuity. And you'll realize if you can do it or not once you think that the ones that, I mean, you reminded me of an investment I made, Rally Point, which I thought was going to become a unicorn, right? It was smart TVs before smart TVs. And we had the killer app, which is fantasy football at the time. And, it failed in the last mile of the last mile of the last mile, and merchandising at Best Buy, where it was in the wrong place. And, and there was a lot of money dumped into it. And you wake up one day and you're like, I guess Google was right. I mean, these startups fail, and sometimes they fail when it's unexpected. As a matter of fact, I would challenge where I sit in the pre-seed, the ones I thought were slam dunks came out okay, or some actually failed. And the ones I thought were mediocre became unicorns, became top 40 unicorns. So you don't know in terms of the journey and the pivot. That's why you focus on teams, because you can never map that out. That's the first part of the question. The second part, look, I'm not sure if I subscribe to the point of view you out of MENA are going to create tremendous success in Silicon Valley. You might think about a business model that has already been de-risked globally to accelerate the exit. But if I get an entrepreneur that tells me I want to create the next Facebook, and I say, that's your right, that's your privilege, but you probably want to pick up and go to Silicon Valley and launch that, global startup from there. But if you have an adaptation of that business model that has been, de-risked globally, and you want to capture that regionally, there's no better place to do it than in Silicon Valley. The world has become specialized. And if you have something that from the get-go, the audience is global, just like manufacturing this pen, you're going to want to go to China to do it. If you want to have something where you scale globally from the get-go, you probably want to do it from the pockets that will accelerate that scale. And that's not MENA in the region. And that's not what we're after. But we looked at business models where we think there's a unicorn out there, that by the time they wake up and they think of our region, the question of do I build it or buy it should always be buy it, because we've already been building it for the last 3 or 4 years. And that is the Kareem story. That is the Souk story. That is the, the recent shopping InstaShop story, right? These are business models proven, tested, and they've adopted market access. So that's kind of addresses the 2 points.
No, yeah, I think, yeah, and that also aligns with the top industry that's being invested in the kingdom today, and that's technically e-commerce if you look at the numbers. So that's also in the Magnet report that e-commerce remains the top, and the top 2 investments there, I guess, were also one investment, actually 3 of you here have invested in, and that's Impact 46, MEVP, and STV, all invested in Nana. And there is also Jahez that Impact 46 invested in. So maybe I want to go back to you, Abdulaziz, a little bit and understand better kind of the industry focus in that sense in e-commerce and the risk profile of those startups. So this is kind of a two-faceted question. From one side is the risk profile of the startup and them being in e-commerce. The second side is, you mentioned earlier how it's becoming easy to attract LPs and investors to put money in funds. So I want to learn more also about kind of how is this attractive for either family groups or even high net worth individuals in that sense?
Okay, there's no doubt that it is a risky business, as Mohammed mentioned earlier. It is a risky asset class, but private investors are rushing into it because they feel the need for investing in technology. It's you have to be part of this movement or you'll be left out. So that's what family offices are. That's how family offices are approaching it. Or I should say the more prudent and the smarter ones are. It's been to some family offices, It's actually the only hope sometimes. Sometimes it's a savior. Think of people that are invested in retail. What they saw during COVID was something, they had to rush into technology, start from scratch, buy it, to do anything, just it's there because it's their only lifeline. You can say that to any industry that saw digital transformation, and we all know how COVID accelerated it. We were lucky that we invested some earlier, and in some instances just at the brink, just at the beginning of COVID. STV can tell you the timing. They invested in March, Nana, and next month COVID hits, and or the lockdown was literally days after we closed the investment. So yeah, we've been lucky. For family offices, when they view it as part of this transformation, it's no longer as risky as the asset class usually is, because it's something you need to conduct your business. They're already in private. Family offices are already in private equity in their own legacy businesses, right? So it becomes VC is becoming more part of their, let's say, private holdings, rather than something that's niche and exotic. It's becoming more closer to their, let's say, day-to-day business, much closer. I'd like to also link that to what's happening in the 2030 plans and the reform plans, that all the reforms that the kingdom is witnessing. I think the economic reforms being implemented in Saudi were, in a way, the first, they spurred the first wave of investment into technology. I'm talking 2015 onward. If you think of businesses saw their energy costs doubling or tripling overnight, cost of labor doubling sometimes, they had to be more efficient over a short period of time. And for that, the best investment is technology. If you think of it, how do you become, the best return on investment, if you had to be efficient for a short period of time, it's investing in technology. And technology could be a WhatsApp messaging, or an ERP, or a cloud solution, or cloud infrastructure, your own. It's whatever technology fits your the industry you're in, or robots, or whatever. I think you can't rule out the economic reforms that are being implemented, and I hope we continue the economic reforms that we already started, and especially labor reforms, mobility of labor, getting used to higher labor costs. I think will only attract more investment and channel more investment towards technology and automation, and improve the overall productivity of people. That's part of our role, actually, as investors in technology, is to improve productivity, and that's family offices realize that and appreciate that, and they're actually guiding us sometimes, and they're helping us with helping guide us towards investments that fit their own needs, because they are in business and they're facing difficulties and challenges. We've been learning from our LPs, actually, sometimes. Now he tell you sometimes an LP today was talking to me. He says, you know what, I have this SaaS solution that I've been using, and I've been promoting it to all my competitors because I actually invested in that SaaS business. And that tells you how things evolve when a big digital transformation wave happens.
Yeah, no, That's understandable, but like typically, but also one other observation we've seen in ecosystems that are growing, that you start with maybe sometimes government initiatives, and that's also something that's a bit highlighted in the STV report or Insights report. And then you move further down the line to some angels getting involved, and then eventually the last step you see is corporates moving in. So on our preparation to the session, Ahmed and I had a discussion a bit on the corporate VC model. So STV definitely is not a corporate VC, as Ahmed explained to me, even though they have a single LP today, which is STC. But I want to ask Ahmed a bit more about the role of corporate VCs in growing an ecosystem, and how does he see this moving forward? Like how, Ahmed, do you see this moving forward, that the involvement of them in the ecosystem, putting money in there, supporting, I don't know, startups getting their first customers, all these kind of things, like how realistic is this? How fast do you think they're going to move in and get that kind of investment hat on?
I think I'm very keen on corporate involvement, and their involvement could happen whether as a VC or something else. But the thing I think which could be one of our biggest needle movers in the ecosystem is that we need to see a lot more B2B companies. And when you speak to any B2B company, and one thing I promise you is that you'll hear in their story, in their journey, is that, listen, we started that year, we were in an incubator for I don't know what period, and then that big corporate came to us and gave us a pilot. And then we raised Series A and we became really big. So like every B2B company has this very pivotal moment where they secured their first pilot, their first proof of concept, and that drives the incentives for investors to invest and then to back them, etc. Take that, and then with the fact that how many large corporates do we have? And forget about the Fortune 500. Let's look at let's make a list of the Tadawul 50, Tadawul 20, whatever you want. Is there like a KPI or an accounting system or like some sort of incentive for their own sake that they need to start engaging startups? They need to start engaging startups because they need to become more competitive. And then startups also benefit because they have their first customers, and it gives birth of this wave of companies that are waiting to happen in the B2B sector. So it's not, corporate VC is important and we need to see more of it, but much more importantly, we need to see more of corporate engagement in its broader sense.
One other thing, so I've seen that you and I think Mohammed moved to the kingdom almost at the same time, or you moved back. I think Mohammed moved in around 2 years ago, if I'm not mistaken. And I want your and also Mohammed's perspective on what got you personally to be that excited about that opportunity. So I understand that all the initiatives that happened and all the money invested to kick off the ecosystem and start the investment scene were attractive for sure. But on a personal level, what got you to the kingdom, and what also made you how do you feel about it 2 years now down the road after this happens? You can start again, Ahmed, it's fine, and then I will go to Mohammed. Ahmed?
I'll go first, sure. So initially I was in Aramco, and I got the opportunity to establish and manage their startup accelerator and Aramco. And then they got the opportunity to study abroad. And at some point I started working with this. I was one of the early employees, even though I was an employee, but I still got the opportunity to see growth firsthand, at least. And during the period when I was there, the company the founders managed to raise from Google, got their Series A from there, and then saw the team really expanding extremely fast. I think we went from 6 to 30 in about a year or so. We started having presence in other cities. So I started being available in New York. Away from, initially it was in Seattle and then I went to New York. So the whole journey was extremely educating. Starting off with, as a generalist, where you had to play the role of whether it's sales or product management, and then if you need me to be a sales engineer, I am that. If you want me to be a marketing, a content writer, I'm also that. To finally later on, where we needed to hire the specialists, and like we got a real salesperson who taught us how to actually write or respond to purchase orders, and even our pricing got really impacted. So it was one heck of a learning journey. And then at some point, I've always been motivated about building something or enabling something in the region. And when the time was right, I knew about STV, it didn't happen yet. So I texted Abdurrahman and Ahmed that what are you guys up to? And that started the conversation of me coming back.
Yeah, quite a story. And then Mohammed, maybe share a bit about your personal thing and how you got to the kingdom.
So to the region or to the kingdom specifically?
Kingdom specifically.
So I've got some good news for you, because I actually wrote an article exactly about that. One is, and I coined from the movie Dune, for all your geeks out there, father, the sleeper has awakened, which was, I coined in the third entrepreneurial revolution. I'll actually share with you on the chat link here the two articles. And the second article we just did for MISA, the Ministry of Investments, which is what I've learned in 2 years since I've moved to Riyadh. So to spare you guys the whole lot of detail, you can kind of read the movement. The first one was quite evident. I think it was just a matter of time before the center of gravity in the entrepreneurial ecosystem shifts to Riyadh. I mean, it had all the elements and just was waiting for all these pieces to come into place for this to realize. It's the biggest markets, the biggest native talent pool, etc., etc. But I almost feel like it had to go through this journey to get to where it is. And there's a saying: if you want to be a rancher, you go to Montana. If you want to find the opportunity in the tech space and the next big thing, Saudi, in particular Riyadh, is the place to be. So I give you guys some homework and some reading, letting me know what you think. But the first is about, and it really shattered my expectation, is how advanced Saudi Arabia is when it comes to the tech infrastructure. I could almost, I'll make a bet that it's one of those places where the public sector is actually ahead of the private sector in terms of innovation. I joke, I tell people, if I knew that picture when I landed in the airport, when I first got my, residency, is going to follow me everywhere, I would have taken a better picture, because it's literally so interconnected and intertwined. And if I want to get a visa somewhere, oh wait, I have this ticket I have to pay. It's beyond super advanced. And once you get exposed to it, you understand how switched on this place is in terms of the right freeway to put tech innovation on top of. The freeway is laid. I joke with because I wear another hat, which is I'm involved with investments in the US. I'm always zooming and chatting with people in Silicon Valley. And I think this is the only place in my life where when I ordered a 200 meg fiber connection, I actually get 200 meg fiber connection. It's beyond me that actually, when I look at the speed, it is what it says. This is the only place, and I've been around in so many geographies where the infrastructure is incredible. So these are the two articles that would highlight a bit more, double clicking on these two questions, and I'll spare you the detail.
Cool. No, this is amazing. Glad actually you have a full, I did not know all these articles ahead of the session, so it turned out to be the right thing to ask Mohammed. You mentioned actually a couple of interesting matters, a bit about infrastructure and other things. So if we also go back to some of the reports that have been out there, we get to know a lot of the efforts and kind of initiatives that the kingdom have been doing the last 5 years to encourage entrepreneurship, encourage startups to incorporate in the kingdom, and to have their activities ran through there. Now, and I think the STV one, in the STV report, you get to read also a couple of the challenges. Some of them are around, I believe, the kind of legal and financial instruments. And something else also goes around the access to talent and having this as something as could be an obstacle, if you want, to the growth of the ecosystem. I think I want to go back a bit to Walid, since he's been around the region a bit and we've seen this in multiple countries, including Lebanon, UAE, and some others, where the government has put some effort. Maybe it was not fully taken to the full extent in some cases, some other cases a bit more. We've seen some success maybe with UAE, but curious to know from you, Walid, a little bit around what you see are the things that were done that were exciting in the kingdom on the initiative side, and what's still missing in that sense to first have the right infrastructure or environment, and second, to attract the right talent, which is the kind of absolute necessary element for startups to succeed.
Sure. I mean, we can talk a lot about that point. I believe that the SVC initiative, as an example, and this capital unlocking of capital has been an amazing thing because you need to jumpstart, right? So jumpstarting is key, and that's not the first time that this happens. That has happened before in the past. I remember in the kingdom, I was in the kingdom in 2004. Working actually there, and I've worked for STC as a client, and jumpstarting ecosystems for different industries has always been key. So you need that infrastructure play. Back then we worked on media, not really the internet, but the idea is the same, and that has created a lot of funds and private equity set up. Most of them died, very few have remained. The same is happening today. A lot of what you see today is needed to jumpstart. There will be failures, for sure. I think you have to expect that. But what will emerge is probably a trained workforce that is going to recycle itself and create new opportunities. I think unlocking capital to jumpstart is key. Obviously, infrastructure, red tape, all of that, it's key because you have two actually things that fundamentally discourage business and discourage entrepreneurs. One of them is corruption, obviously, and the second is red tape. And red tape is present everywhere. It's present all over the world. So and so is corruption. But the point is, the more you do to ease the doing business, the better outcome is. This way you don't get to discourage people to create opportunities. There are technical things that are still missing across the region to entice a bit more liquidity, such as effective capital markets, liquid capital markets, so that trading, capital raising happens a bit smoothly. And this can happen also for early stage companies. You don't have to be always a massive company to access public money. The whole idea of capital markets is to facilitate the flow of public money into private initiative. There's a lot that has to be done there. I follow closely what is going on in some of the exchanges, Numu being one of them in Saudi. I think more is needed on that front so that we solve that issue. Talent, you cannot force talent build up. You have to have an amazing educational infrastructure, but also you need to have a story as a country, a story that attracts people, all these wonderful people, first Saudis to go back home, and also non-Saudis to be also participant in the economy, because I don't believe any economy or any country can make it on its own. And this is where I slightly disagree with some of the things that I've heard, I think the whole region has an opportunity to start exporting technology products. And therefore, in order to attract quality talent, they have to see that they can do a bit more than the local economy, right? You want top-notch people that can build and scale. You need to come to a city or a country that's welcoming and that's going to help you jumpstart your business. Not a lot of red tape, great infrastructure, and a story. And this is why when you look at some of these success stories in the Middle East about what ecosystem we're able to build that, you'll see, for instance, that the UAE, as an example, has made it, significantly well in the past 10 years to create a story for talent all over the world to come and start. And there are businesses that were born in the UAE and are scaled globally, right? There are multi-billion-dollar businesses. There's Checkout, there's Fresha, Schedule. There's a lot of companies that, more and more of those have been born out of this part of the world. Why? Because when your story starts resembling that of a, not Silicon Valley, it's going to take us a lot of time to be anywhere close to Silicon Valley, but the more it's going to resemble like a Seoul or Bangalore or Berlin, the more you're going to see amazing people coming in, employing, etc. So things around attracting talent, making them feel, able to produce, and that talent will employ, will partner, will invest, will take money, will create value, and that's going to be beneficial for everybody. The beauty of the region we live in, and I think I think this is a big asset that we have, is this is a fairly integrated region. You look at the GCC, for instance, is a fairly integrated region with about 50 million people, give or take. Has excellent relationships with, say, Egypt, where there's a lot of labor, a lot of investors, new market next to it, etc. So the relative good integration of the markets in the region make also ecosystem and hubs thrive and attracts talents from that front. So to answer your question on the regulation, I think there's a lot to be done. I think what has been done is fantastic given where we were. For sure, given where the country was 15 years ago, and today it's day and night, but that's, it's a constant evolution. Every day you have to, and I would not be surprised if you will, in the coming decade, if we keep this momentum for a decade, I would not be surprised to have, a city in the GCC, be it Riyadh or Jeddah or, be like a new, Seoul or a new Bangalore or even a new Berlin when it comes to innovation. I'm not surprised. All it needs is a decade of hard work, collaborative work, honest work for it to happen, and then the story gets you ahead of that curve. I saw it, I lived it. The delta is tremendous from where we started as a generation 10-15 years ago and today. And if we keep with that delta 10 years into it, that's all you need. Just keep pushing, keep shipping.
Yeah, no, I think that's great. And on that, so we're top of the hour now. I have maybe a final question myself, but then I'm going to ask a couple of things coming from the audience that joined us tonight. So Abdulaziz, you mentioned a bit about the reforms leading towards 2030, but also in line with what Walid was mentioning on the things that happened in the last 5 years in the kingdom, there is also the kind of plans towards 2030 and what kind of investments fit that vision. And I've seen Impact 46 talk a lot about this everywhere. So I would like to hear it from you actually. What kind of investment opportunities would be actually in line of Vision 2030 for the entrepreneurs out there? What are things you would be looking at? What kind of opportunities you would be going towards that Vision 2030 and executing on it?
Okay. Well, I talked a bit about our focus, the areas we favor more than others, and so they still remain the same favorite areas and sectors, and that's also reflected from where in the type of investments we made so far, and we think we'll continue to be investing in the same areas. I think the reforms and changes that have been happening were immense, and we're really grateful and thankful for the leadership for all the amazing changes that are being lived. And actually, our answer and our thank you to these reforms is that our internal challenge in Impact 46. We're striving to be the biggest, or a major backer at least, of the next unicorn to be created here in Saudi. We have earned our way, and we deserve our own unicorn here in Saudi. I think, by the way, we're happy to lose that challenge if someone else would like to do it ahead of us, as long as we can see this first Saudi unicorn soon, I hope. We have now, most people tend to believe that financial services has the largest opportunity to create a unicorn. I think it depends. Obviously, what's the definition of a unicorn you use? My personal definition is creating $1 billion valued company, whether it's listed or private. I don't think it's bigger. That makes that big of a difference. The point that Walid was mentioning about capital markets, I think again Saudi has made very interesting changes in the capital markets regulations, and liquidity has been far and beyond any level we've seen around the region. So I think that's fertile ground for technology companies to find the right funding and create shareholder value and create economic value. Yes, your question, to answer your question, we're happy about all the reforms. I think everything is in place. All the stars are aligned. We just need a bit of time. We're racing and chasing. We just want a bit of time to see the flowers bloom, I hope soon. That's about it. And I don't know if it answered your question, but I just felt like we had to mention this.
No, it does. It does. Look, also, I've seen you've been active on the Q&A as well, Abdulaziz. You've answered a couple of questions, but I want to open up actually one of them to everyone here to answer as well. So I think we have Talal Faqih, who asked us a question. I'm going to read it for you to get a chance to answer it. So it seems like there is a trend where startups would measure their success based on the size of the fund. How accurate is this from your point of view, and what would truly measure a startup success? Whoever would like to answer this, would love to hear your thoughts on it.
Sure, I can answer that. I think the amount of the money you raise is not an indicator of your success, obviously, because what indicates your success is your financial returns for your shareholders and stakeholders in general. That's the definition. I think we use the amount raised in a company for two reasons. One, to signal that the company is successful in getting cash, and cash is king. And second, that we are successful in deploying as fund managers. So there's also a self-interest or a self-promotion in these figures. I would definitely not use them as a measure of your success. Not for me. I mean, yeah. It has to be clear. Success is how much you make at the end. And I guess Muhammad was giving a great example about
how much to make for yourself and the economy overall, I guess.
Your stakeholders, yeah.
I mean, I'll just add it's a specialized world, right? You don't want to be a jack of all trades, master of none. The skill sets, the way you approach investments, the team, the opportunity differs at pre-seed, at seed, at A, at B. Each one has a role to play. And in mature ecosystems, you find multiple players. I know of great successful general partners in Silicon Valley that does not raise beyond their age, and they're probably one of the most oversubscribed funds in Silicon Valley. There's the concept now of the sole capitalist, where people are decoupling funds and investing in individuals because they've shown that track record. So it's an industry that has matured and has multiple layers. At one point, I was running a hedge fund, right? I didn't feel it was my calling, so I went back to where I appreciate, where I feel I can add the most value, where my technical and entrepreneurial and adds value. So it's not a size; it's just what do you want to be and where you think you can add the most value is more of the right.
Makes sense. Ahmad, you were unmuting yourself when I was asking a question. You had anything to add on this one?
No, pretty much the guys covered it. It is not a measure of success. And if you insist on trying to conclude something out of that, then maybe it would give you directionally on the valuation, and then directionally, if you trust the investors, you'd get a directional value on. Okay, so it's that valuation, so maybe it's that performance. So it's hopefully optimistic. But things can totally go south, so we don't depend on these.
Yeah, fully agree.
Allow me
Yeah.
one more comment I'd like to make, just something I'd like to mention. I'd like to extend the open invitation to all the audience viewing us here and following this podcast, that there are very interesting success stories by founders in Saudi. Over the last year alone, we have many success stories, and I'd like to I'm happy to share some of these stories, and on the hope that I get you more excited about startups. And if you're still thinking about whether or not you pursue your new venture, I'll tell you an example of a founder we invested with less than a year ago, in last November. So it's 11 months ago. Our investment is already 5 times our initial investment. We made 5x returns. We have the option to exit, but we're not going to exit. The company's value is close to 100 million riyal, actually crossed 110 million riyal. And he started off from nothing. He had zero capital. He probably, invested $50,000 maybe from his own money. And now he owns 50% of a company that's worth more than 100 million over the course of 1 year. So I just wanted to say that there's a lot going on all around you, and I'm talking to all the founders and entrepreneurs out there. Just go and try to get it, try to do it.
Definitely,
no much.
So the session has been on Zoom, also on Periscope and YouTube. We've had more than 1,000 people joining us tonight. So hopefully they'll get to hear the story and get excited about this even more. I'll ask maybe a final question that was, I'll actually tweak a question that was asked by Yazan Al-Fiyafi. He said, what's the difference between venture builder and venture capital? I will not ask this as is. I will ask more about, what do you guys think about venture building as a model? That's something that's becoming very trendy today. And how do you think about it? Like, is this the next thing to replace VCs, to empower VCs, or to be part of it? Like,
sure, I have probably an opinion on this. I think venture builders have their place under the sun, and there's a lot of them. And this is a model that has been tested all over the world. It does not have a template. There's not one template on how to do it. Very diverse templates out there, but it is an interesting product to have when you look at the broader financing innovation toolkit. But I'd say that's not the only one we need. We also need venture debt funds, a whole variety of tools that we're still missing in this toolbox of innovation financing.
Yeah, Ahmad?
Pretty much that. I would say, all ecosystems have venture builders probably. It's harder to. So the question is, what's the difference, right? I know that's not what you asked, Sami, but a venture builder is a group that builds companies, and then a venture capitalist is an entity that finances that company. So we don't build, we finance it. And in each ecosystem, you'll always find venture builders, not necessarily always very successful and thriving, but there are good examples. It's much more difficult to pull off. The question is, is there room for them? I definitely think we always need builders and makers and tinkerers and people who build products. So if that comes in the form of venture builder, then why not? There's definitely a lot of white space out there, a lot of opportunities to build things. And if the venture builder is the right way to do it, probably for a lot of those, yes.
Great. Okay, I'm going to wrap up with the final question, especially that this is also focused on the ecosystem in the kingdom. And so if a startup is hearing us tonight and they're listening to you and what's going on in the kingdom, what would you tell them, and that would make them move actually to the kingdom to start their business there, their startup there, and grow it from the kingdom? What do you tell them to do so?
What's the question? What do you tell them?
Yeah, how do you convince them to move to the kingdom?
Well, I mean, that's an easy one. I did it, right? So I had a good, comfortable life in Dubai, and we closed up shop and moved the family because of the opportunity. So, either I'm a genius or an idiot. Time will tell in terms of the results. But, the writing was on the wall. Again, I highlight all that in the article, but we've been super, super excited, both as a family moving to the kingdom and both professionally. Namaz really, we think, is adding a whole lot of value to this ecosystem, and we're really excited. By the way, we're not investing also in the Saudi of today. We're investing in the Saudi of tomorrow. So we think deal flow is only going to get better and better. Teams are becoming more and more impressive. And what's coming is very, very promising.
Walid, Ahmad?
No, I think the question is interesting, because when you ask somebody, are you ready to move, in some people's head, it means, they're going to dump their life behind them and move and, forget about their, in a cloud world, in a heavily connected world, it's not the case anymore. And COVID has proved that you can actually, run a multi-country operation easily. So whether you decide to move to Saudi or what's important is that you move into a nascent ecosystem, growing, a welcoming one, and the one that is going to make you feel productive and welcome, so that you give it your best. And I think those elements are present today. And I said this before. I mean, you just have to keep on building this up, and it will attract more of Muhammad cases.
Hopefully. Now, for sure, we're going to read Muhammad's article. I think he's pretty adamant that we do so. So I think the word is out there for that purpose. Abdulaziz, Ahmad, you had thoughts on that?
I'll just want to echo one thing Walid said earlier, which is you cannot build a successful ecosystem without being open to others and to attract the right talent. And I think Saudi now more than ever, we're open for business more than ever before, and this is something everyone believes in to the bones. And this has been echoed by the leadership, especially recently and in the past week, if you've been following the AI conference and what have you. These are metrics that we keep track of in STV. Where we want to know how many of our companies have moved their R&D to Saudi, to Riyadh, or other cities, their engineering, their HQ, etc. I think I don't believe there is. And you're starting off. You're taking it from first principles. some of the largest populations, a lot of capital that is ready to be deployed, and a lot of youth, and then very high internet and smartphone penetrations, and then a government from the top down that is extremely eager and keen to make things happen in every possible way. So I think we have big open arms, and there is a lot of reasons here to show up and to create that mutual success, inshallah.
Thank you. Yes, I would obviously second everything that was said before me. And again, I'll share another story. I know people like stories, and there is this startup that we invested in here in Saudi, just to prove that how everything is ready and funding is available, opportunities are out there, and talent is no longer a limitation because you can work remotely. A startup we invested in that was only incorporated in June. It has 5 founders. Only 2 of the founders had actually known each other before. The other 2 are in Germany and never even met in Germany, in different cities. Another person in Dubai, and 1 in Saudi. They created the company. Today it's worth, I don't know, $10 million, more or less, or maybe 15, depends how you measure it. And they never even met before. Till today, they never met physically. All they met was on Zoom, and they managed to attract the best talent from all around the world. They started a very, very interesting startup. So even the argument around the scarcity of talent, we can't hide behind that anymore. I mean, that's no longer available. We have the world to hire from. So we just need to put our heads together and try to find the best opportunity and go after it. And we need passionate entrepreneurs to save the world. That's all we need. I hope that gets someone in the audience excited about startups and the opportunities that we have. And thanks. And other than that, thanks a lot, everyone, for hosting us. And thank you, Think Tech, for hosting us. And I really enjoyed the discussions. And I hope it resonates with the audience. And we try to make it as productive and as useful as possible.
Yeah, no, I think the whole session tonight was very informative and engaging for everyone around. So I would like to thank each and every one of you. All of you have been doing an amazing job in the region and the kingdom as well, to make sure startups have all what they need to build the right venture and to take it to the next level. So I'm pretty sure with all your efforts, all your expertise, and the backgrounds you bring to the table here, and the support you're giving these startups, we're going to be seeing some great successes coming out of the regions, hopefully. So thank you again for all of you and for your time tonight. And I hope the audience enjoyed this discussion. That's it for now, and have a great night. Thank you.
Thanks a lot. Thank you, Sami. Thanks a lot.
Shukran.